When you look around in classified or inquire about a property for sale, you are given the basic sale price of the property promoted by the builder or the owner. But is that amount all you have to pay when you start living in the house? The answer is big no. Buying a house incurs more than just basic sale price. To say the least, as the process begins, various fees, charges and costs accumulate, straining your finances further and further if you were anticipating only the initial amount. After going through the list of applicable charges, it is no wonder that a homeowner always tries to sell the property for higher price than they bought it for. Welcome back to MyMoneyKarma's comprehensive series on home ownership. If you haven't watched the previous videos of this series where we break down everything you need to know about getting your dream home, do that now. So far, you have learned the overview of home ownership process, analyzed the factors that go into forming the perfect picture of your dream home, and discovered how to spot your choice in the vast housing market. Further, we have also helped you decide whether your home should be rented or owned. In this video, we'll take a comprehensive look at all the costs you will incur when you end up owning a home. At the end of this video, you will have a clear idea of each and every possible type of fees, charges, or additional costs you'll have to bear in the home ownership process, so that your financial plans can be prepared and reinforced accordingly. Don't forget to subscribe to the MyMoneyKarma channel, where we bring you the most important and relevant content you need to conduct your personal finances like a millionaire. To understand the situation better, let's look at a real-time example. Ravi has taken an interest in a high-rise apartment unit with 2 bedrooms and a built-up area of 1244 square feet, offered at a reasonable discounted price of 5,900 per square feet. At this rate, it will cost him 73,39,000 rupees, as all high-rise apartments and gated communities add extra charge for providing amenities. You have to include that price in the basic cost. In this case, let us say the apartment Ravi is planning to buy charges 8,50,000 for amenities, taking the total to 81,89,600 rupees. This total is without GST included, upon adding which the total gives up to 85,99,080 rupees. However, in the initial payment structure put forth to Ravi, he was given a total of 87,49,125 rupees. On closer inspection, Ravi realizes this includes legal and documentation charges of 25,000 rupees, Corpus Fund 62,200 rupees, maintenance charges at rupees 36 per square feet per year with 18% GST, that is 52,845 rupees, and pipe gas at rupees 10,000. If these numbers are confusing you already, then you are pretty much on the same page as Ravi so far. What more? This number excludes the stamp duty and other charges that Ravi must pay to eventually own the house. Now, if you're looking to apply the same metrics to your home purchase calculations, be warned that not all properties have this one particular structure of payment. The charges vary depending on several factors, including location, loan financing, and your preferences. Through this video, our aim is to bring into a broad daylight all these costs that may fall on you while buying and owning a house. To start off, we have broken down all the costs in 3 broad categories: borrowing cost, processing cost, and cost of preferences and amenities. Some of these can be negotiated, exempted, or even charged double if not paid attention to. So keep your eye and ears tuned and let's get started. Borrowing cost. These are of course that charges that come around when you avail a housing loan from a lender to finance your home purchase. If you would like to save lakhs on these costs, do check out our other videos providing legitimate tips for the same. In the meantime, let's take a look at each of them separately. Down payment. Lenders normally provide up to 80% of the property value, leaving the other 20% for the borrowers to pay. If a property is valued at rupees 1 crore, the down payment for the property must be for 20 lakh rupees or above. We say above because there is no upper limit on how much you wish to pay for the property on your own as a down payment. Principal and interest. The 80% or so of the property value that the lender agrees to pay is called the principal amount, and the borrower's fee charged on this amount is called interest. Depending on negotiation and the credit profile of the borrower, the interest rate ranges between 6 to 12%. Not sure how to get the best rate possible? Well, you can simply sign up with MyMoneyKarma for that. Furthermore, the interest rate may vary depending on whether it is a floating rate or a fixed rate loan. You will need to pay back the principal and applied interest as EMIs every month to the lender. Loan processing fee. The process fee varies from lender to lender. The general range of this fee is between 0.5% and 2% before tax. In some cases, financial institution might even waive off the processing fee if your profile is strong enough. Prepayment. A prepayment is paying the loan amount either as EMI or as a lump sum to reduce the loan burden. Borrowers with a fixed rate of interest can be charged up to 4% of the outstanding principal amount before tax as a prepayment penalty. This fee varies as it depends on the terms and policies of the lender. On the other hand, borrowers with floating rate of interest are not charged a prepayment fee. Late payment. Failing to make the EMI payment can incur a late payment penalty which can be up to 2% of the loan amount. It can mean further losses on your future loans as well as your credit score takes a significant hit. Processing cost. Once you have your loan sorted, these are the next set of charges that flow in hard and fast during the paperwork of getting the house registered to your name. They can be a little tedious to keep track of, and that is exactly why it is so important to be aware of each of them beforehand. Brokerage. If you're buying a home through a broker, then you should keep in mind that their fee also falls on your home purchase budget. 1 to 2% is the common fee charged for the brokerage in housing market. However, a few reputed brokers might charge even higher. Stamp duty. Stamp duty is mandatory fee you have to pay to the government. This lead tax proves the authenticity of the sale agreement and acts as a sale or purchase evidence of a property. Depending on the state in which you are buying the property, it can vary between 5 to 7% of the property value. The charge can also vary from urban to rural areas within a state. In some states, there is also 1% rebate on stamp duty if the property is named under the woman of the house. Registration fee. A property registration fee is usually 1% of the property value. It generally stands along with the surcharge, which is 2 to 3% of the stamp duty, and cess, which is up to 10% of the stamp duty. The registration fee also varies depending on the state, property type, amenities, location, age of the property, and the homeowner, etc. Goods and services tax. Before GST, under construction properties and units without completion certificate were levied with service taxes, which buyers were liable to pay. 3.09% was applicable for properties that were smaller than 2,000 square feet or under 1 crore valuation, whereas 3.71% was applicable on properties above these values. A few states also charged 1% value-added tax or VAT on the total cost of the property. However, these charges are now absorbed under GST. GST on the house that value less than 45 lakh rupees is 1% according to the definition of an affordable house. A GST of 5% is levied on the house valued more than 45 lakh rupees, while GST is applicable on all properties that are under construction. GST is not applied on the properties that are ready to own after completion of construction or that are old and are up for resale. Corpus Fund. A corpus fund is established by the builders for covering the maintenance and caretaking of the apartment until the homeowner takes possession. It also contributes to the maintenance of the amenities as well. Memorandum of deposit of the title deed or MODT charges. Every borrower is charged with an MODT by the lender within the range of 0.1 to 0.5% on the home loan granted. This is an undertaking by you given to the lender that you are depositing the title documents of the property with the lender at your own free will. This means that they can sell the property if you fail to repay the loan. Legal and documentation charges. Along with registration and stamp duty, the builder asks for the homeowners to pay for the documentation involved and the cost of a surveyor or solicitor if any diligence has been carried out. Preferences and amenities. Now that we have discussed cost involved in acquiring your home, it is now time to explore cost associated with possessing and living in it. Remember, all of these charges may not apply to you, but why risk being caught unaware when you happen to run into them? Preferential location charges. A preferential location charges or PLC is the extra fee that you pay to buy the property that is highly preferred. It could be the house on the corner of the street or an apartment on high demand floor or penthouse with a scenery. You are generally charged up to 4% of the basic sale price as PLC. External development charges. Varying from state to state and location to location, these charges are levied by the government to the developers, which are then passed on to the buyers. As the name indicates, it is the cost incurred for the development of the area around the property. Infrastructure development charges. This is yet another fee charged by the government for the development of physical infrastructure like roads around the property. Firefighting equipment charges. All projects, residential and commercial, must install fire safety equipment and the costs are levied by the government to the builders, which are again charged to the home buyers. Property insurance. A few properties are insured to protect the equity from the unknown accidents like earthquakes, fire, etc. These are generally added up to the final cost of the house. Maintenance. In the above example, maintenance fee is charged per square feet per year along with applicable GST on it. In apartments, all the charges calculated are based on the carpet area according to the Real Estate Regulatory Authority (RERA) mandate. A carpet area is an area within the walls of the apartment. This excludes common area, balconies, etc. Usually builders charge this fee in advance as a deposit of up to a year or two. This cost includes common costs like security, elevator maintenance, caretaking of property, etc. A few apartments also offer pipe gas for a set price. Parking. Apartments usually give one car parking space for free of cost. Truth to be told, the cost is levied in the unit price of the flat. However, if you own more than one car, then you may have to pay for extra parking space, which varies between 2 to 3 lakhs. Amenities. Amenities are highly showcased while settling on the final bargaining price of an apartment. Even gated community homes are planned to have amenities that increase the property price. These amenities can include a gym, swimming pool, tennis court, sports center, clubhouses, etc. The discussion of whether you need them or not is really important, considering how highly they influence the property value. Club membership. Clubhouse and membership are generally covered in the amenity cost that you pay during the purchase. However, there are cases where membership is charged separately. This is generally a one-time payment for a pre-decided period. Interior. Whether you are buying a newly constructed house or a resale one, it is true that interior incurs high cost. If you're buying a newly constructed house, you have to include the furniture, wooden work, and other interior decors into your budget, which can vary widely depending on your taste. On the other hand, if you are planning to buy a furnished apartment, the cost of the house will be way higher than the basic price, thanks to the interior cost involved. They are also sometimes called overhead charges. Power, water, sewerage, drainage. Water bills are generally by the government as frequently as power bills. You are also liable to pay for the sewerage and drainage system as a part of maintenance. Even after paying electric connection charges, you are still charged with applicable fee for installing the electricity meter and the connection to the electricity board. A few societies and apartments also have power backup plans and charge the owner for their maintenance separately. As mentioned earlier, not all these charges are applied to all properties, while some are waived, some are hidden, and some simply do not apply. Considering the applicable charges and fee, on average, the cost of a property is pushed up by 10 to 15%. All new home buyers must be aware of all the additional charges and see which can be negotiated before it is too late. So there you have it, your comprehensive guide to identifying and understanding every single one of the costs involved in lengthy process of making your dream home a reality. Now that this is underway, we'll take a step back and help you understand how much you are eligible to borrow from a lender in the first place. Join us in our next video where we take the home loan process head on and tackle its first and biggest question: what is your borrowing capability? But remember, living on our channel is rent-free, so please do subscribe to our channel and systematically watch all the videos in this comprehensive series on home ownership. Buying a home should be an exciting journey, not filled with anxiety and uncertainty. We'll make sure it is as simple, enjoyable, and profitable as you deserve.